to Kian Soon, Chief Executive Officer and Fund Manager at Astral Asset Management. Kian Soon, great to talk to you. So what puts China in a better position when it comes to the equity markets today? Because most of them are in the red, but China is up this morning. I mean, many say that the domestic markets don't move to fundamentals, right?
If you look at China, actually is at the forefront of the recovery of COVID virus. It has been leading the rest of the world because since the second quarter, most of its factories activities has resumed. We are seeing a lot of consumer activities resuming back to normal as domestic travel. You can fly from one city to another in China without any form of quarantine or stay-home notice. So China has been on the forefront of this recovery, and you could see that most of the economic indicators are pointing north.
But what's holding it back then? Because, I mean, it can't just survive on the domestic market, right? The rest of the world is still sort of moving in fits and starts.
I think if you look at China, the key concern would be, in terms of exports, in terms of the demand that is required by Europe and the Americas. China on itself, in terms of domestic consumption, is a pretty strong driver for its economic growth. And if you look at the way that the tech companies are performing, and is actually doing very well in terms of helping the country to tide over this very tricky situation. In terms of resumption of activities day to day, I think the country has done very well as well.
Indeed. In fact, with the latest results from Tencent Holdings, they were a great surprise in this pandemic because, well, basically they only survive on a domestic market, right? But are you at all concerned about the Sino-US relationship and bilateral relations between these two countries? And I'm just going to ask the what-if question because we're just months away from the US election. Let's say Donald Trump gets re-elected. Then what should we do? What should we expect in terms of those relations, and how would that impact the economy and the stock markets, China and the US?
If you look at the tech giants, let's be clear that 96% of Tencent revenue is actually coming from China. And actually Tencent is also listed in the Hong Kong Stock Exchange. So there's very little influence the United States are going to have on this company. And if you look at the other tech giants like Alibaba, JD, most of them have already successfully seek a second listing in the Hong Kong Stock Exchange as well. United States is no longer the only market that they are listed and they are held hostage by any form of capital markets issues that could be raised. As you mentioned, presidential election in the United States is round the corner, and we're definitely going to see more kinds of rhetorics raised by President Trump in the coming months in terms of both countries' relationships, as well as going after the tech companies that are listed in the United States, as we have seen in ByteDance, we have seen in WeChat, Tencent, etc., etc. And I think the companies will have to cope with this increasing pressures. And ultimately, I could see that more of the Chinese tech giants will come back to Hong Kong to list. And this would actually relieve the pressures that they have only one capital markets that they are being exposed to. As we go towards, in terms of presidential Trump election, I think China is prepared that even if Trump wins the election, they would have their countermeasures regardless.
What would they be if we had geopolitical tension that escalated into military conflict?
I think there's always a key concern about military conflicts. But in my humble opinion, Trump has never been a pro-war person. I think he's raising the stake, but he's unlikely to launch an all-out war, knowing that this would cost a lot of money for the United States, who is not in the best of the fiscal health. And also his personal outlook is rather to use threats and negotiations versus launching a full military confrontations.
All right, let's get to the broader market strategy then. What are going to be the major drivers? We are in the third quarter right now. The second quarter earnings are coming out. They don't look good at all. Neither does the economic data. Are we going to see a sustainable turnaround in corporate profits, stock market performance, and the economies globally? And which geographies do you prefer in Q3 and beyond?
If you look at the global markets, there's definitely, we've seen a great recovery in terms of stock markets in the second quarter. This is because stock markets and global equity markets are always forward looking, and we've seen that this has been the case because of the economic recovery that is gradual, that is happening as more countries come out of the lockdown situation since the second quarter. This will be the case as more and more countries resume full economic activity, and as we have more knowledge and awareness on how to handle this COVID virus, it's very unlikely that any countries will announce a full national lockdown again. And any good news of a COVID vaccine or a test kit that could give you a rapid test kit that could give you results in 5 minutes or 30 minutes would definitely enhance international travel and trade. And I could see all these are the positive drivers that would drive the equity markets going forward.
So if that was the case, we do get a vaccine around the corner. Russia's already announced that they have the world's first approved one, even though it hasn't reached, of course, the proper human trial state or the phase 3 state. And we do get the rapid test kits, eventually. What will that mean in terms of stock market strategy? Because, I mean, the winning strategy has been the pandemic playbook. Should we stick to that sort of strategy if we get the vaccine or the rapid test kits?
I think the initial stage of trying to position portfolio to win in this market, it was to basically look at vaccine companies, look at companies that produce a lot of medical kits, the medtech companies, the glove companies. Going forward, as the vaccine becomes available or a rapid test kit becomes available, I think portfolio managers will start looking at how to position their portfolio to capture the economic recovery business, i.e., trades will be more open. The business that will most be affected previously would actually, benefit from the reopening of the economy. So there's a good deal of repositioning that would be critical in order to capture the recovery of the economy. And I think this offers good opportunities for all investors.
Sounds good. Kian Soon, thank you very much for joining me today. It's great to be speaking with you. Kian Soon, Chief Executive Officer and Fund Manager at Astral Asset Management.